Happy Monday, traders and investors. It's Rod with Pow Group. Welcome back on the Pursuit of Wealth, your home for MJ stocks, crypto assets, and interviews. As I mentioned, it's Monday, March 13th. Hope you're well. And in this video, going to be doing a different style video today. I want to go over how to prepare for a potential market crash that I do think is looming. This isn't to be an alarmist by any means. This is just me sharing my thoughts and opinions, what I'm doing, what I'm preparing for. And again, not to spread FUD or get anybody, on the edge of their seat. This is just how to prepare, right? Markets can go up, down, or sideways, and we need to prepare for all scenarios. Before we get to it though, make sure to smash the like, help support me in the channel. It doesn't cost you anything. If you're new, you can subscribe, tick the bell. You'll be notified on any future videos or when I go live. I'll try to go through this video as quickly as possible today. I do have a lot that I want to cover, but essentially I'm going to go over my top 10 things that I'm doing right now to prepare for one of the biggest market crashes in history. And a lot of people are saying, how do you prepare? How do you deal with the stress of the market? And I'm going to go over a lot of that today. And a lot of that has to do with just experience, but like I said, just preparing for all scenarios. And I know the markets are designed to make people feel, some type of way, whether it be greed or fear. And generally when we're feeling fear is when we want to be buying, and when we're feeling greed is when we want to be selling, right? And there's no shortage of fear in the markets right now. We'll go over some technical analysis. We'll look at the SPY chart and what I could potentially foresee happening over the next year or so. But we'll jump right into it here. So like I said, I'm going to do a little bit of a different style format today, but I do want to just share my top 10 things that I'm doing right now. So again, how am I preparing for one of the biggest market crashes in history? First in the list is going to be, I have a six-figure cash position that I'm still waiting to deploy. I'm being very, very strategic with my cash. So I still have a six-figure cash position, and I'm keeping money in multiple banks. And as we know, Signature Bank, Silicon Valley Bank, their failures have spooked the market. And I think this is really just a tip of the iceberg, where I think there's somewhere close to 5,000 banks in the US, whereas in Canada, there's only like 50. So I think the US could get hit a lot harder than Canada. But there's going to be a lot of banks that are just going to go the way of the dodo, so to speak. And that has to do with the fact that the financial world is changing, right? And there's a reason why crypto was created after the 2008 financial crisis a year later. It's because the fact that, we need to get rid of the trust aspect and third party. And that's what crypto is great for, is because it removes that trust barrier so that different countries and different sovereign entities can transact with one another. They don't have to trust each other. They can just rely on alphanumeric code and mathematics essentially, and it removes that trust barrier. And it's going to allow financial inclusion as well. So many people, there's I think over couple billion people in the world that are unbanked. So as long as you have a satellite, right, Starlink's going up, pretty soon the whole world will have internet. As long as you have a cell phone, you can now participate in the new financial system. So there's going to be a new financial system. Banks are going to continue to fail. I'm not saying all banks are going to go away, and by no means am I a supporter of banks, but it's, put your big boy pants on and just be realistic. Banks probably aren't going anywhere. It's just what we know as banks today are probably going to transform, right? So I'm keeping money in multiple banks here in Canada, where it's CDIC insured, right? FDIC in the US, up to 250,000 in the US and 100,000 in Canada per bank account. So I'm keeping money in two separate bank accounts. I'm also making sure that I have zero debt, and I have a safety deposit box as well, where I'm keeping some cash on the side, right? So keeping physical cash outside of my bank account in a safety deposit box in case what hits the fan. And that's just another way to protect against any kind of, if there's like a storm. I know in PEI there was a storm and people couldn't access the electronic systems, so they had to pay with cash or just write down their names, right, and say, I owe you, I'll pay you later. But in Toronto and PEI, that's fine, where the population is 100,000, everybody knows everybody. But in a city like Toronto or Vancouver or somewhere in the States, New York, that's just not going to fly, right? So having that money, that physical cash for a rainy day, I do think cash is going to get phased out, but that won't be for a while. Number two on the list is my RRSP, so my retirement savings account. This is money that I'm not touching. I'm planning to hold. I'm probably going to keep it in my retirement account until I'm 40, 50. Pretty much well on the way to retirement here now. I've always been saying freedom 30. I'm 32 right now. I'll soon be 33 here in a couple of days. But I didn't come from wealth. I didn't come from a family that was focused on money, or taught me a whole lot about money. They didn't really teach us about money in school either. But I've always had a passion for it. I have a passion for helping people, and with a little bit of elbow grease and hard work, it goes a long way. And you start to and I got lucky with the real estate market, which I'll talk about here in a minute. But if you don't take risks, then you miss 100% of the shots that you don't take, right? So with my money market fund, in my RRSP, that accounts for about 95% of my RRSP right now. And I'm being very conservative with my RRSP. I've made a lot of money over the last couple of years. With the market going up, the S&P 500 up 125% in a couple of years when it's accustomed to 10 to 12%. So we've got 10 years worth of gains condensed into about 2 years. Now I'm, capital preservation mode. And this is my retirement account, so I'm being very, very strategic, very, very cautious. So right now, 95% of my mutual funds are in a money market fund. And what is a money market fund? A money market fund is an open-ended mutual fund that invests in short-term debt securities such as U.S. Treasury bills and commercial paper. Money market funds are managed with the goal of maintaining a high stable asset value through liquid investments while paying income to investors in form of dividends. And it's very, very low risk, whereas a balanced portfolio or an aggressive portfolio in mutual funds are kind of an old news, but I do think that there's value in them. But the fact that, in certain employers contribute to RRSPs and contributions from employers into your group plan and things like that, so there is some benefit to doing it. I probably wouldn't recommend it for the average investor. There's ETFs and things like that now, like the S&P 500 SPY. But essentially, a mutual fund that's aggressive, right? If you're in a growth or aggressive growth and the market tumbles, let's say the S&P 500 tumbles 40% from all-time highs, an aggressive fund could drop, 70, 80, maybe even 90%. A balanced portfolio, a mix of, it's got a mix of different things in there. We got bonds, you got stocks, all these different balanced portfolios offer a little bit less risk, right? So let's say the S&P 500 drops 50%, a balanced portfolio might drop, 60, 70%, right? Just a slight, little bit less than an aggressive, obviously. And then you've got money market funds, which if the S&P 500 were to drop, 40, 50%, whereas an aggressive fund might drop 80, 90%, balance might drop, 50 to 60, maybe even 70%. A money market fund might drop, 10, 20% at the most, I would think. So again, it's very, very low risk. And it's how I'm playing the market right now. And I've been buying on the dips. I've been switching it back out of a mutual fund, out of the money market fund into a balanced and aggressive. And now I'm about 95% of my money in my RRSP, which is a 5-figure cash position. Right now, I've got 95% of that in money market. And then the rest, the 5%, is exposure to balanced and aggressive mutual funds. Number 3 on the list out of my top 10, I'm focusing on real estate. I sold my properties in PEI. I did a video on my real estate portfolio game plan. You can go check that out. Just go to my YouTube page, click on the search button, and then type in my real estate portfolio game plan. It should come up. I'm not going to go over all of that in this video, but essentially I sold properties in PEI during the pandemic, and that was because the properties had over doubled in value. One over doubled, one almost doubled. And I had a friend that bought a house in PEI, and 3 years later it over doubled, and that was way quicker that it doubled than my properties. But still, when does that ever happen, right? So I was focusing on getting out of those markets where we were highly inflated, where we had a ton of appreciation. So I sold my properties. I had a house, I had a duplex in a rental property in PEI, and I sold those during the pandemic before, when interest rates were near zero. And then I bought some condos here in Edmonton, and I've got an interest rate of about 2% before the interest rates went sky high. So again, preparing for that, anybody could have really seen it coming if they just did a little bit of research. A monkey could have told you that the amount of money they were printing and the inflation, the interest rates just had to go up, right? Because of the fact that they were printing so much money and inflation, right? And it's how they cool the market down. So right now, I think, markets like Toronto, Vancouver, even PEI are going to get hit hard whenever the real estate market corrects. So that's why I'm focusing on the Edmonton condo market, because it's very, very low risk. It's been beaten down for the last 15 years. There's some condos going for 60, 70, 80,000, 100,000. There's no shortage of them between 100 and 200,000. Again, you can check out that video for more information. But I've got a condo that I'm living in now, and I've got a condo that I'm doing solely for the purpose of Airbnb and VRBO, and essentially focusing on cash flow. So my Airbnb property, my condo downtown Edmonton, was very, very cheap, just over $100,000. And again, very, very low interest rate. I think it was 3%. And again, you're getting it at a low, you're buying it at the low in a market, right? Maybe condos continue to go down from here, but if it's a $50,000, $100,000, $150,000 condo, even if it drops 50%, you're not that worried compared to buying a house of $500,000 or $1 million. If the market drops 50%, you're at $250,000 or $500,000, right? That's a big deal. So you're protecting against that market downturn and uncertainty. And again, focusing on cash flow. Right now, my Airbnb property is providing over 100% cash flow per month. So my expenses are around $1,200, $1,300 a month, and I'm easily bringing in double that. And then I'm also focusing on the appreciation of the value of the home. So hopefully, no guarantees in life, but just like in PEI, when I bought my house, I was making a ton of money off the duplex, off the rental property, through the double rent. So it was a duplex rate. So I'm taking in 2 rents, about $1,000 on each side. And my expenses were about half of that, just a little over half of that. So I was net positive on the cash flow over, doubling essentially my cash flow per month. And then I benefited from the appreciation of the home, right? So one of my properties actually over doubled in value. So that is called double dipping. And that's what I'm focusing on here in Edmonton with the real estate market. 4, so focusing on an S&P 500 short position as a hedge. So again, and you can do this with options, puts, things like that. If you want to do long dated puts, things like, insurance policies through options, that's a possibility as well. Personally, I don't really like options. It's not really something that I trade. I've dabbled in it a few times, but I would feel more comfortable just a short position as a hedge position on the S&P 500. My exposure to my long-term investments, so for example, real estate, MJ, crypto, which I'll talk about in a minute, those are my long positions those are why I'm hedging those positions with the S&P 500 short, right? So I've got exposure to some asset classes long, so I'm going against the grain here, and I'm shorting the S&P 500. This is only about 5% of my net worth that I'm using to short the S&P 500 with. And that's just in case, the market really does start to tumble like I expect that it will. And I recommend SPXS. It's an inverse leverage ETF. That's for short term. I wouldn't recommend that for long term because there is some, it does degrade and there's some issues with that. But you can just Google that. I won't get into that for the sake of this video. But then if you're looking for long-term short positions on the S&P 500, I use SPXS, just quick, wouldn't hold it for any more than a few weeks. And then just regular SPY short shares. So the S&P 500 short shares, just regular short if you're short shares if you're going to go long term. Number 5, focusing on MJ stocks, so long term, basically, buying these stocks, diversifying, and focusing on LPs, so licensed producers in Canada, producers in the US, MSOs, ETS, retailers, right, picks and shovels. And I'm focusing on MJ stocks primarily because the US has yet to legalize. And when they do, that is going to be massive, right? It's going to be the biggest catalyst of our lifetime. Probably the second biggest investment next to crypto. I think crypto is going to offer the most, wealth transfer. It's going to create more millionaires than any other industry in the world because it's going to be the asset class that swallows all asset classes. But MJ, I think, is going to offer the second most opportunity for gains, relatively speaking, percentage-wise. So again, once the U.S. legalizes, just imagine, look what happened when Canada legalized. We saw, 10 to 20, maybe even 50x on some names. That's gonna look like child's play when the U.S. does, and we're still only in the first inning in MJ. So I'm focusing, like I said, I've got multiple different stocks, right? I've got Hexo's probably my biggest one, definitely my biggest one. I've got Tilray, Curaleaf, so a mix of picks and shovels. I've got high tide retailers. I've got some ETFs as well, and again, I'm hedging those positions with an S&P 500 short position. Also, dollar cost averaging. For those of you in Canada, your TFSA, tax-free savings account, we got an extra $6,500 of contribution room. I'm using that for buying MJ, solely MJ, and I've still got about 20% of that left, and I'm looking to buy potentially more Tilray. We did hit a new all-time low there. I think it was on Friday, or maybe today. I'd have to bring up the chart, but we did just recently hit a new all-time low, so I'll be looking to add that one very shortly, which I've been calling out for, that I anticipated that it was probably going to hit a new low. And again, just being patient, right? Not just going all in on MJ stocks with all the money that I have now. Dollar cost averaging, buying when we drop another 10%, another 10% from there, buy another little bit. And like I said, I've got about 15 to 20% left in my TFSA for contribution room for this year. And I've got a long-term and a short-term account. So my long-term MJ account, I've got, Hexo, Tilray, Curaleaf, High Tide in a long-term account. Then I've got it in a short-term account. Short-term, I'll take profits at, whatever, once we hit certain price ranges. And then in my long-term account, I'm not selling anything until we hit, all-time highs, or, well, I'm not really too concerned about all-time highs. Mostly concerned about the U.S. legalizing. So I'm holding my long-term account until the U.S. legalizes, and at which time most of these stocks are probably going to hit new all-time highs. But everybody's different. Your long-term portfolio might be based on something else, right? Maybe it's based on a dollar value. Maybe it's based on all-time highs. Maybe it's based on time. Maybe it's based on 3 to 5 years, right? Everybody's situation is different. You might be retiring in 5 years, a year from now, 60 years from now, 40 years from now. You never know, right? So everybody's situation is different, but I'm focusing on the U.S. legalizing as being the catalyst for selling my long-term bag. Also focusing on crypto assets. So I'm long on crypto, specific Crypto's not, I don't own any Bitcoin. I don't own any Ethereum. I sold it a couple of years ago when Bitcoin was around 50,000, when Ethereum was at around 2,000, 3,000. I got out of it. I have no interest in owning those unless they drop, 90 to 95%. I'm focusing on utility tokens. So my biggest positions are XRP, XLM, Algo, HBAR, and Link. Those are the ones that I'm focusing on the most, ones that are going to be actually used by enterprise grade level software and that are working on the new financial system, working with the the incumbents and the governments around the world. Because as we know, governments will bring out the tanks before they let their sovereign entity and their money get taken over, right? And I do think that crypto was created by some three-letter agency, some government, some group of governments, right? It wouldn't be around if they didn't want it to be. I'm also dollar cost averaging and dollar cost selling. So this is something that I'm going to be doing. I'm dollar cost averaging, but I'm going to dollar cost sell as I exit positions. So I've got different positions. XRP, I've got a profit taking of $5, $8, $10, $13, $17, right? And then those are just and then I'll have a long-term account that I'm always going to be holding, right? So different ways that you can do things. But yeah, long-term, short-term account as well. And self-custody. Can't stress how important that is to self-custody your crypto. It just means that you're not leaving it on an exchange where they control the private keys. As the saying goes, not your coin, not your coins, not your crypto, not your crypto, not your coins, not your private keys, not your coins, right? So however you want to say it, if you have crypto on an exchange, not your coins, not your crypto. So they have the coins in their possession, right? You don't control it. You don't control the private keys. Whenever you withdraw it, they initiate the private key on their end, right? So with a ledger, this device right here, for example, which you can check in the description, you'll see a link to that. It's an affiliate link. I will get a kickback from that. But essentially, it's a little device that you store your crypto on and you get a backup phrase. So you get these 24 words and it's a backup phrase that if you ever lose the device or it ever malfunctions, I've got 2 of these actually. And if you ever lose it or forget your password into the device and it locks you out, you can restore it with this recovery phrase, right? These 24 seed words. So you use that as a way to protect against, FTX is a prime example, right? FTX went under. I actually lost a 5-figure cash position to Quadriga CX. That was a Canadian exchange that was basically a Ponzi scheme, and the person created fraud and it went under and I lost all my money, right? A 5-figure, and I'm glad I learned that lesson with a 5-figure position versus, a 6 or 7-figure. So that was huge for me to learn, and I learned my lesson the hard way. And I actually have 2 of these devices just in case one fails. I have another one. I've also got a Yubico security key for my Gmail account, so that when I log into my email, I have to put that security key in. So again, I could go on a whole different. I've also created a course on this as well. If you go to powgroup.ca or pursuitofwealthgroup.com, you can enroll in a free course, and I go over all of these different security things that you can use for crypto. But in effort of time, I'm going to move on. And make sure you keep your accounts up to date as well. Make sure you know your password. Make sure your login is working. Make sure your phone number didn't change and your MFA, your multi-factor authentication. That happened to me the other day. I logged into one of my accounts that logged me out. I had to log back in, and then my phone number changed. And then I had to upload my ID and then wait 24 hours for my ID to, so do all that, make sure you're current with that so that if you ever do go to sell, that you're not scrambling, right? And it's just as important getting money in as it is out, right? So you need to figure that out and make sure your accounts are up to date and that access is sound. Number 7, Congress being banned from owning stocks. Watch that to mark a market top. So The Hill reported that Hawley introduces Pelosi Act banning lawmakers from trading stocks. What do we know about the Federal Reserve? They banned employees from the Fed from owning stocks at the tip of the stock market a couple of years ago. Of course, they didn't ban themselves at the bottom in March of 2020. They banned themselves to the top so that they look like heroes. So I think that if you're wondering, I do think that we're going to see one big market rally left in the market before we see a really, massive crash and potentially one of the biggest crashes in history. Again, not to sound like an alarmist or get people freaked out. I'm just being 100% honest with you. And when we have 125% of gains in 2 years in the S&P 500, we're at all-time highs, and we're accustomed to 12% a year. So 10 years worth of gains in 2 years, you need to expect a massive drop, right? So watch for this bill and Congress being banned from owning stocks to mark a potential top, and then that being the catalyst to one of the potential greatest stock market crashes in history. But again, a monkey could tell you that it shouldn't be like, how are elected officials, how are people in Congress and these people that craft laws, how are they allowed, or print money, right, that are adding liquidity in the market and propping up the market? And it just doesn't make any sense. How are they allowed to own stocks, right? It's borderline criminal. It's insider trading at the highest level. If you or I did that, we'd go to jail for many, many years, if not maybe even our lifetime, right? So just watch for that. Number 8, mental health. So again, being with friends and family, money's only money, right? It's not everything. Yes, it's up there with air. It's up there with food, right? We need it, or life's pretty crummy. But at the end of the day, it's only money, and we only get one shot at this life, and tomorrow's never guaranteed. So make sure you're spending times with friends and family. Take a break from the markets. I went on a trip with my family in Florida. I went to Mexico. I was planning a trip to Jamaica, but I might skip out on that. But yeah, focusing on spending time with my girlfriend, focusing on going on walks and things like that with my dog, trying not to look at prices in the market every day, right? So take a break from the markets, spend time with your friends and family. Tell your friends and family that you love them, because like I said, tomorrow's never guaranteed. And meditation is something that I've been doing as well to just calm my brain, right? If you're like me, I think 1,000 words a minute, and I'm always thinking. And meditation really helps with that. Number 9, physical health. So maintaining a healthy diet, drinking less alcohol, right? I've been drinking more Canna beverages, so more MJ infused beverages than alcohol, trying to take a break from alcohol as well. And like I said, just eating healthy, not eating fast food, right? Exercising regularly, yoga, things like that. And number 10, know that you cannot perfectly time the market. So while we might have a particular stance on or bias on the market, whether it be bearish or bullish, just know that you can't time the market. No one can, and we don't have crystal balls. And if you do, it's probably just sheer luck, right? Look at Michael Burry in 2008 when he called the housing crash. It took him multiple years before he was calling doomsday alert multiple years before it happened, but ultimately ended up profiting like $100 million, almost $1 billion for his firm as well, and investors. But yeah, I mean, it just goes to show you that even the best of the best can't time the markets perfectly. So don't beat yourself up. If you can't time the markets perfectly, there's a good chance that you won't. Probably less than 1% of people will. And technical analysis, things like that, we can use that as a way to get an edge and potentially look at what's happening, right? Could potentially happen, right? Technical analysis isn't a blueprint. It isn't a guarantee. It's just probabilities, right? And the S&P 500, we'll just take a quick look here before we end this video. If we take a look at the dot-com days, that's the closest thing that we have to the dot-com bubble, to the everything bubble of 2022. The only difference is this time is we have all this quantitative easing. They're printing tons of money and injecting that into liquidity into the system. And we had the C19, right? So we had all these different things that are starting to change the dynamic of the markets. But look at how similar, history doesn't always repeat, but it rhymes. Look at how similar the dot-com fractal and bust was to this bust. So in 2000 is where the price peaked in the dot-com bubble. And the RSI, the relative strength index, when it's above 70, it's considered overbought. You don't want to be generally buying when we're monthly overbought, and you want to be buying when we're oversold down here around 30 or below. So when we were overbought here in 1996, 4 years later, the price peaked, and we had this bearish hidden RSI divergence with lower highs, lower lows on the price or on the RSI, and the price was going higher lows and higher highs. So eventually, it was a tipping point and a breaking point where things had to change, right? And then sure enough, 4 years later, that's what marked the top. And then we went to monthly oversold. Look how eerily similar this is. In 2018, the RSI peaked on the S&P 500, and then 4 years later in 2022, the price peaked. And then we went to a monthly downtrend, and we're heading to monthly oversold. So very, very similar. And if we take a look at the amount of days from the top to the bottom there to where the price peaked to the bottom, it took about 760, so about 800 days, we'll say. So if we look at the top of this market to 800 days, you're looking at a potential bottom being set somewhere around April of 2024. But again, we can't expect the exact same thing to play out. It should be similar, in my opinion, because it's the closest thing that we have to this everything bubble that we can compare it to. But keep in mind that this time around, we have the artificial printing of money, right? And Congress still yet to be banned from owning stocks. So I think that we could potentially see one more. We could deviate from this fractal. I took the dot-com fractal here from the dot-com bust, and this is the blue. So this is, look how very similar we are. We had a lower high, then a monthly downtrend, and we're following it to a T. But I wouldn't be surprised if we deviated from it a bit. We see a massive rally. Congress gets banned from owning stocks, and then we ultimately go to monthly oversold. And somewhere around, this time next year, we form a market bottom, maybe into April, May next year. Could even be longer than that, right? Because of how extended we are to the upside. And we've been in a bull market since 2008, that financial crisis, right? From that low to the high, we're now up almost 800%. And then look at March 2020, from the low there to the high, we were up almost 130%, right? When in a couple of years, when the S&P 500 is accustomed to 12% gain a year, right? So we need to expect with massive upside comes massive downside. It's the law of gravity. What goes up must come down. And we even had the monthly EMA 12 and 26 bear cross with the yellow above the white. That crossed, and then we went to monthly oversold. Look what's about to happen again. The monthly EMA 12 is above the yellow. The yellow is above the white, the EMA 12 and 26. EMA 12 crossing above, down through the 26 is a bear cross. That happened in the dot-com days, and then we went to monthly oversold. So watch for that to happen as well. To potentially indicate that we're heading to monthly oversold. And based on the dot-com fractal, based on the support and resistance levels that we have through technical analysis, we could be heading down to around the low 200s on the S&P 500. Many experts calling for maybe even 200 or slightly below. So we need to prepare for all scenarios. But at the moment, we are starting monthly consolidation. We could change the trend here with the low, high, higher, low. We're scouting a higher low. The higher low on the monthly time frame will be indicated. We'll be confident once we confirm a weekly uptrend. But right now, it's all about 418.31 resistance. If we break that resistance, we're back in a monthly uptrend. And right now, it is a potential for a monthly inverse head and shoulders. So we have the left shoulder, head, right shoulder. And if we take the measured move from the low to the high here using the real candle bodies, you're looking at a potential new all-time high somewhere around 475, maybe even 480 if we do confirm that. So we'll be watching for that and that deviation, like I said, as a potential because of how manipulated the markets are, the money printing that's going on, and Congress still yet to be banned from owning stocks. So like I said, I think we could deviate, get Congress getting banned from owning stocks, marking the top, and then we could enter a potential multi-year bear market. And like I said, I don't think low 200s, maybe even sub 200 on the S&P 500 on SPY, the ETF, I don't think that's out of the realm of possibilities. So again, not to be an alarmist, but it's not looking too hot. We closed below the 10-week moving average. We're bearish on the stochastic and the MACD on the S&P 500. I think that we could easily, I mentioned to Power Group private community members that we could easily see 380, 375 on SPY here on this contagion and this market fear that we have. And then today we hit 380. And then 360 would be a potential right shoulder and an inverse head and shoulders, which is a bullish reversal pattern here in a monthly downtrend. So all about breaking the monthly downtrend, confirming a monthly uptrend from here. And like I said, not looking too hot. We had a bear cross of the 50 and the 100 weekly moving average as well. And we could potentially see a bear cross of the 50 and the 200 weekly moving average, which would again spell a lot of cause for concern, right? And then we did have a death cross on the S&P 500 with the 50-day moving average above the 200-day. Look at the golden cross. When the golden cross happened, the 50 below the 200, it occurred here when the price was around 286. And then we went all the way up to 470. Then we had the death cross with the 50 above the 200 that crossed, and we've seen a lot of downside, mid 20%, 25% of downside. We'll just take a quick peek here. So from the high to the low there, we're down about 26%. But we're seeing a golden cross again with the 50 coming up through the 200, and again, indicating that we could see another rally before a massive plunge. So again, this isn't to be an alarmist. This was just to me to come on here and give my honest opinion, what I'm doing, what I think of the market. Again, we can't time it perfectly. Markets can only go in 3 directions, up, down, or sideways, as long as you're prepared for all scenarios. Hopefully, this can prepare you for whatever scenario that we have to deal with. And like I said, everybody's situation is different. My situation is drastically different. I wish all of you the best. If you do have any questions, if you want me to elaborate on anything, let me know in the comments below. Let me know what you're doing, your thoughts and opinions. Do you agree with me, disagree with me? Always love hearing from you. Is your strategy a little bit different from mine? Like I said, there will be no two people with the same strategy. So always interested to hear what other people are doing as well to protect against a potential market downturn. But going to end it there, thanks again for joining us on The Pursuit of Wealth. It's Rod with Power Group. Share the video with anybody that might find value. Hit the like if you think I earned it today, and we'll see you again on the next video. Take care.